Good evening. This is the video newsletter for buysellshort.com for Thursday, November 19th. Down day in the market today, and pretty much like it's been the last couple of days, most of the market has been dead. It just spread over to the major indices today on the heels of a downgrade by the moron analyst at Bank of America slash Merrill, who came out and said downgraded the semiconductor stocks, which hammered the tech stocks, and then made its way over to the Dow stocks. And the thinking behind their downgrade was that there is a glut of inventory, supposedly, of chips. Very hard to believe that given that inventories have been dropping all around for the last year. But as I said in the chat room, it's a good sign medium term for the market and for tech stocks in general because analysts downgrade stocks at bottoms and upgrade them at tops. The fact that we're getting a downgrade here is pretty good news because these guys are never right. They manipulate their calls to suit their clients, and that's just how the analyst game works. But let's get back to the charts. Here we have the Dow 15-minute chart finally broke down through that bearish rising wedge that's been in place since early November. But again, late in the day, stocks made sort of a comeback. So we're still on the fence. We've got options expiration tomorrow, so it's probably more of the same chop in the market. Flip over to the daily chart. We'll get a better view here. It definitely looks like we've got a near-term top in here, just like we had on each one of these previous stair-step moves. And downside targets would be the 20-day exponential, that's at 10,145, and then the 50-day moving average at 9,900. One thing to note here on the Dow is you can see over the last month, volume's really fallen off a cliff here, which not a good sign. We need to see the volumes move back in again. But again, a large part of the reason of that is we're up substantially from the March lows, and a lot of people have missed the move, and those that did not miss the move are trying to protect their profits right now, and it makes it hard to move into stocks when all you continue to hear on TV is, it's the end of the world, the dollar's going to crash, stay out of this market, and you've got, the talking head morons on CNBC like Art Cashin, who's missed this entire rally, saying right now he's waiting for a calamity to happen and then he might consider buying. So, a lot of headwinds right now. We are up pretty big, and a flush, would probably do the market some good, which is why we're continuing to sit high on cash and, reducing our target prices on plays. Despite how crappy the market's acting and how small caps are acting, there are a lot of pockets of strength. A lot of stocks just spiking left and right. The problem is there's no real rhyme nor reason to it. The only way to actually grab a couple of these is to buy a boatload of stocks, and in a market like this, it's not really a good thing to do. So, for the most part, sitting on the sidelines and just grabbing the few plays that we have been grabbing is the way to go. TRID was a new alert today at $1.81 to $1.83. Cash rich tech stock, very nice chart set up here, sort of like we saw on OPWV. Big sell off over the last month. A nice consolidation around the lows, and with the semiconductor stocks down today, this one was actually showing some nice strength. RSI was coming up out of 30. We had a positive MACD cross. Stochastics are coming up through 20, so the stars were aligned on the chart, which is why it was a nice little small play, and we got a very nice pop on this one late in the trading session. First target is the 20-day exponential. Right now that's at 2, and then secondary target would be a move to the 38 Fibonacci retracement, and that's at the 220-ish area. So this one looks very, very nice. Stops at, given the pop that we saw today now, would be trailing stops to today's low, which was 176, I believe. And we'll be looking to add any dips on this one. SIMG was a trading alert a couple of days ago. Had a little pullback today. This is another extremely cash-rich tech play. Remember, OpenWave did the same thing. It did a move, then it retraced, and then it did its real move. So not really that concerned right now. It seems real strength we're seeing in cash-rich tech stocks that have volume, like OPWV. We saw it on TRID, and then we have SIMG. So we're going to be sticking to these. And as you'll notice, we've moved way up the price ladder on a lot of stocks. We're playing the upper ones to $2 stock range now because that's what's working right now. The small caps, penny stocks, still showing some weakness, even though ONSM looks fantastic. It's just a matter of a patience game. It's still holding its 200-day moving average here. And if you're playing this one, play small as usual, and then we can look to add when it finally breaks out of this trading range. But really, right now, it's just a matter of a waiting game and playing the opportunities as they present themselves. Next week is a holiday shortened for Thanksgiving. Tends to, especially in bull markets like we're in right now, Thanksgiving week and thereafter tends to be very, very good for small cap stocks. So fingers crossed that we see that sort of action again next week. That's it for the video tonight. Quick video update. See you guys in the chat room tomorrow. Goodbye.